We should start with the VIX here because it's been trending down, of course, since October 15th, but really has stabilized and now at 1477. What kind of indication do you see that that volatility, that growth scare we saw earlier in October may have subsided?
Well, I think as far as VIX is concerned, we are pretty much in the neutral territory. I think market has gone through multiple hurdles, Ebola, and now obviously last night with the elections, the latest ones. And I think now we are just waiting for ECB tomorrow. So pretty much in the neutral territory. I think now stocks are moving mainly on earnings. We are seeing some big moves, both on the downside as well as on the upside. And now basically correlation comes down, dispersion goes high. The stocks are moving because there are winners and losers.
Well, we'll see what the ECB has to say. Correlation was fairly high after the BOJ made its move last week. One stock that we're watching pretty closely is Apple. It's going to begin trading ex-dividend tomorrow, which means that investors who buy it will not get access to the company's dividend payout of 47 cents per share, scheduled to be paid out next week. What kind of activity do you see in the
calls are totally dominating Apple's trading. Of course, it's mostly related to the dividend play, where basically pre-split 500 strike calls, which are now 7143 strike, expiring in January, which have been listed for a very long time. There's still plenty of open interest in those calls.
How expensive are those?
Those are basically trading almost at parity. So 7143 versus $109 that the stock is trading right now. Take the difference. And there is no value to the puts. So massive trading happening in those call options. And the message to our viewers here is, if you are long those calls and feeling pretty good about having made all that money since the stock has basically trading at all-time highs, exercise those calls. And if you don't exercise them because you don't have the cash or something, then the thing is to get out of those calls, sell them, you'll be able to buy them cheaper tomorrow.
Gotcha. All right, and you also have a trade for us on Nvidia, the graphic chip designer maker. Or designer of graphic chips.
GPU, yeah,
yes.
Good graphics processor. So Nvidia, my trade is I want to buy a call calendar in the name ahead of earnings tomorrow after close. I want to buy the January 22 calls, and I want to sell the November 22 strike calls. It costs me about 21 cents to put this trade on, and that is also my max loss before November expiration. So why I want to do this? I want to do this because I am long-term bullish, but near-term neutral to slightly bearish in the name. Simply because the stock has already run around 25%
so
year to date.
It's a technical reason, really.
It is a technical reason. They do report earnings tomorrow, and they are gaining market share from their rival, which is AMD. And there is plenty of other positives around the stock when it comes to mobile, when it comes to gaming PCs, and also some big analytics. There's a Tesla GPU that they are branding, not the car, but the Tesla GPU that they are also marketing. So there are a lot of positives for the stock and the company. But at the same time, I think given the run-up in the stock right now, I am not willing to be fully bullish on the stock right here.
Right.
So I would like to sell the expensive near-term options with November 22 calls, and I want to buy the January 22 calls and hope that the holiday season brings the real oomph to the stock post-December.